So when is the right time to set up a limited company? Well, chances are you started up small, you started as a sole trader, and all you really need to do is start trading and notify HMRC that you're self-employed. You really couldn't get any easier than that. But as you grow your business and start taking on contractors or employees or start signing bigger contracts, then you might begin to wonder whether you should be converting to a limited company. So when is the right time to convert to a limited company? Well, the quick answer is that the right time will be different for each business. For your business, it might be the right thing to trade through a limited company right from the start, from day one. Or on the other side of the spectrum, you might never need to trade through a limited company. So what we actually need to do is to look at the reasons why you might want to trade through a limited company. Now, there are a number of reasons, but the two main reasons why you would want to trade through a limited company are tax efficiency and, as the name suggests, limited liability. Now, if your business has profits of at least £20,000 a year, then generally, financially, it would be beneficial for you to trade through a limited company. Now, if you want to use a calculator to check that for your business, then there are some great free tools out there on the internet. But do remember that you will have certain costs as a limited company that you don't have as a sole trader. So be sure to take those into account when making the calculation as to whether it's worth the additional costs and administration. Now, as a very general guide, I'd allow costs of about £500 to £800 for your first year of setting up a company. And don't forget to calculate your management time in making the transition. Now, the limited liability status of trading through a limited liability company is a huge benefit. If you're trading as a sole trader and someone brings a claim against your business that's not covered by your insurance, then unless you've got the necessary liquid funds to satisfy any judgment that a court has granted, then you do risk losing your personal assets. And when I say personal assets, that can include your house, your car, and other high-value items. But if, however, you're trading through a limited company, then unless you've given a personal guarantee or have personal liability as a director of the company for matters such as wrongful trading, then your personal assets will be protected. If the company's got insufficient assets to pay the claim, then although it's not something that you would undertake lightly, your ultimate protection would be to wind up the company, and then your creditors would have no rights against you personally. So if from the outset you're going to be entering into high value supply or customer contracts, or you're likely to make profits of more than 20,000 in your first year, then I'd be thinking very carefully about whether you should actually start out by trading through a limited company. Or it might actually be that it's just the type of industry that you're in, such as IT contractors, where the nature of it demands that you start off by trading through a limited company. Now, if you started out as a sole trader, then the question of whether you should convert to a limited company is something that I would advise you to review at least annually, preferably in discussions with your accountant and your lawyer. Now, you may be reluctant to incorporate a limited company because of concerns about cost and administration that goes with it, and certainly it's a consideration. But ultimately, this will probably be outweighed by the benefits of the tax saving and, of course, the limited liability protection. These days you can set up a limited company from as little as £4.99 through online agents, and the only admin requirements are to file the accounts and to submit an annual return once a year, which only costs £13 if you file it online. Now, of course, the main additional expense is in hiring an accountant or a bookkeeper to prepare your accounts, but this can actually be done for as little as £100 a year. Now, another concern you might have is that your accounts will be made public. Yes, it's a valid consideration, but again, not generally one that would cancel out the advantages of the tax savings and the limited liability. Finally, if you do decide to trade through a company, then you will be a director of your company. And as a director, you are going to have certain legal obligations that, if not complied with, could result in you facing a hefty fine or, in the worst case scenario, a prison sentence. But you don't worry about that. You have to be doing something pretty bad to be fined or put in prison. But I do suggest that you do look into your responsibilities as a director before you take that step. So there you have it. They're the main considerations that you should be having in mind when you're thinking about what entity you should be trading through. Now, of course, there are other legal entities out there. You could choose from a limited liability partnership, or a partnership, in fact, if you're trading with another person without having incorporated. There's unincorporated associations, there's charities, there's social enterprises. There's a number of legal entities to trade through. I have just focused on a sole trader and a limited company, as they're the two main options that small business owners go for. There you have it. Keep it in mind. Be talking to your lawyer and your accountant on a regular basis to see not just whether you should move from sole trader to a limited company, but sometimes actually to move from being a limited company back to a sole trader, because there can be reasons to do that as well. So keep it under review and stay safe.